Hi, and welcome to some more crypto news. So we'll continue with the news from mid-February, and then as we progress with this series, I will only be mentioning the fresh news from the past few days. So we have finished on this excellent arbitrage between the BTC and the rest of the world, which has disappeared for the March future, and I think it is still there for the Deribit. For the June future. Let's find that website. It's actually an excellent one. It was great a few years ago. It's now even better, but now the alpha you can extract from this is not great. There are plenty of people like Alameda Research who exploit these things automatically, so you have pretty much no chance in exploiting this in a meaningful way. So you can only capture some premium on the June future. So this is the June, this is the price for BTC, and these are the prices for Deribit, Bitmex, FTX. But if you're planning to go long June futures, if you don't want to pay funding for a few months, you would be looking into buying a future contract. So consider going to BTC. However, it's not a risk-free trade. They can fold and they can run away with your money, and it's more likely in comparison to Deribit, Bitmex, and FTX. So keep that in mind. There are always some risks. So this website it's great. It's being run by Austerity Sucks. The guy is named Swapman, and he is there somewhere on Twitter as well. He's quite a clever guy. It seems like he has been exploiting the inefficiencies in the swap contracts, and this was his tool helping him, and then at some point he decided that he's not extracting too much alpha from this, and he just shared this with the rest of the world. I've encountered this in 2017. Strangely, the website was getting overloaded or was going down when there were some massive premiums, some massive discrepancies. I wonder why. Let's have a look here. So Bitmex, OKEx, we all know they have massive volume. Huobi is more of an Asian exchange. Binance, they fake a little bit of the volume. I think Bybit, I believe they fake the volume a lot. Deribit doesn't fake anything. I'm pretty sure. FTX, how come? Okay, so it's volume. However, liquidity is a different game here. So I believe that FTX has much more liquidity, so you can execute a big trade with less slippage. However, the trading volume is lower than Deribit. This could change over time. I think FTX will steal a significant market share from Deribit and Bitmex. Now let's progress. CoinFLEX, they have very low fees. I think they will steal some market share from the top exchanges as well. Bits, I have no idea about this exchange. Bitsy, I've mentioned them. I'm only interested in them because of the discount. CME, this is probably not for you guys. This is for the institutional guys. You need to have USD collateral. You need to have large amount of collateral, and it works on completely different principles. Kraken futures, I really love them. I think if you're looking for a really, let's call it, reputable place, then you should go to Kraken futures. However, their liquidity and their volume isn't great. I highly recommend them. Their team is great, and in my link below you'll find 20% discount. I don't think you will find a 20% discount for trading fees anywhere else. Everyone else offers 10%, so my link is kind of special. Backed, they have a large project. However, their volumes aren't great. And Bitfinex, probably because people are scared of regulatory risk. People are not trading much on Bitfinex, but it does have completely different and interesting mechanics. So I'm interested in this contract, and at least they're not faking volume. I think their volume is comparable to Bybit and TrueBitC volume. However, it just looks a little bit different. And here are all the contracts, and they are explained, and it's important to recognize which one is inverse, which one is Quanto. There are no Quanto contracts in crypto other than the obvious XRP, USD and ETHUSD contracts on Bitmex. All the others, including the BitC contract, they all act in a linear fashion, so like inverse futures. Anyway, we were supposed to talk about the news, and we are talking about something completely irrelevant. So let's crack on with the news. ETH rates, very high. There are some of these spikes, so people are interested. There are some big buys. There are people just coming. They don't know how to buy 2.7 million. They just, type the number 2.7, then market, buy, and boom, it's a spike. There's more and more of these that I can see. If you're a market maker, you really like them, and it's just it just mirrors how let's say inexperienced the money that comes here is. This guy could have averaged this over a few minutes, and it would be much less slippage, much less fees if he was a maker. But here I was making a point that the high rates, which we still, at the moment the rates are pretty much flat, but I anticipate the rates will stay up more or less until the expiry. When the rates were so high, I believe it was because of the options sellers getting liquidated or forced to hedge their positions. In March, a lot of their positions expire because there's a big expiry at the end of March, June, September, and December. And after these expiries, they will not have that much risk to hedge. Here, Cryptorca thinks that we are at the start of the alt season. I don't think we'll ever have a massive alt season. This ape is just hitting the board, and this is just a representation of how you make money in 2017, just buying random shitcoins. In 2017, a lot of people were just looking at the charts of any coin. Can be dead, can be non-developed, and they were just looking for the ones which haven't yet pumped, and you just buy them, and they will pump. That was hilarious, actually, and unbelievable. Bitfinex. So I'm interested in Leo. And here you can see how a few orders of $1 million are just chasing the price, and they were chasing it up to 1.03 USD per Leo. And it's a very illiquid instrument, a very illiquid product. So you cannot really buy 3 million without significantly influencing the price. And if you have 1 million Leo, then you're one of, there can only be 1,000 people who own $1 million worth of Leo, and 13 million have already been burned. So it's becoming more and more of an exclusive club, and they are burning their tokens at a rate much higher than FTX. Whoops, I've just closed the news. Let's just bring it up. So yeah, what I was demonstrating there was that these orders were significantly distorting the price because of the illiquidity of the product. Oh, for God's sake, sorry about this. Bandwidth limited. Thank you very much, Twitter. Here we go. Okay, so we have finished in mid-February, and that's where we were. Bitmex. So let's continue. Here I thought that it was a blow off top, partially because of the massive interest rates. It wasn't a blow off top yet. What we could consider a blow off top came a few days later. So here I was just expecting that the buyers still want to buy, and it was a blow off top and a dump and then a double top, and then it went down again. We'll see how it all ends. Long term, I'm pretty convinced it all goes up. Here it's actually an important tweet. It just highlights how CIA and the alphabet agencies from US are influencing the world. They were selling rigged cryptographic machines to large part of the world. They called it intelligence coup of the century. I totally agree. ETH 100% in 1 month. I mean, this is big, especially for such a big product. Like 100% for some silly shitcoin. That's okay, but for ETH, this is significant. Futures base is 28% per year, so that's how much interest you would make if you turned this future into a savings account by doing cash and carry arbitrage. And cash and carry just means that you buy ETH, sell futures, and collect the premium. So here, if it was like this throughout the year, then you would be earning 28% per year on your money. Here, this is an interesting instrument. It's on FTX exchange, and this is a shitcoin perpetual token. So this is tracking a significant amount of shitcoins, and it just reflects what shitcoins do. So if you're looking to short shitcoins or go long, whatever you please, it's an interesting product. There is a link in the description with a discount code for the FTX, so have a look and help yourself if you're interested. But this is an interesting token. Like, shorting a single shitcoin is very risky. They can just explode, especially the scam coins. But if you're shorting an index of shitcoins, that's much safer. ETH just continued. It was a raging bull, so it was going up to 0.278% funding per 8 hours. That's equivalent to borrowing money at 275% per year. Would you go to a bank and borrow money at 275%? These were not, knowledgeable humans buying this product. These were just YOLO gamblers thinking, okay, this is the price. I want to go long, so I'll go long here. They were probably not aware of the massive funding. So that was probably one part of the market. The other part were people who couldn't buy ETH anywhere else. They were option sellers. They have sold on Deribit. They had massively negative delta on Deribit, and they were forced to buy on Deribit because otherwise they would be liquidated. That would come with a massive fee. They have to buy, and they have to buy on Deribit. And because so many of them have to buy on Deribit, this is why the premium is so high, and this is why it was at this point an excellent place to go short. Just like in my other series, I'm going long and short in some on some Bitmex testnet products. This was a similar opportunity, like 275% per year. That's a good interest. And that was after the 5% dip. So I have mentioned that ETH is finally rediscovering gravity. Well, then I wasn't short because it went up really a lot. So as a result of these spikes, the futures will mirror these premiums, because how futures move is kind of funny. The perpetual contracts, they mirror the current supply and demand. So if people are buying, they go up. If people are selling, they go down. Futures are just mirroring that rate. So if the rates are high for a long time, the premium goes massively up. If the rates are low, the future develops a discount and it trades below the spot price. And futures are supposed to reflect the expectation of the future price of an instrument. However, in crypto, the futures reflect the swap interest rates over the past weeks, and they not at all, they don't reflect the future expectation, which is funny and exploitable. So futures are good instruments to express your views and go long and short. There is some alpha to be extracted, because normally you would expect it to go, well, Bitcoin to go up all the time, but and you would expect it to go up even more if the swap rates are negative, because so many people are shorting it. So you expect them to be deleveraged and for Bitcoin to go up. But in this situation, the futures are at a discount. So you can extract some alpha from this, hopefully. At some point, Arthur Hayes from Bitmex was showing some evidence that counter trading the premium or discount on the swap generates consistent positive returns. So that's something to think about. Just counter trade everyone. And at this point, counter trading everyone was counter trading people borrowing money to go long on ETH. And on Bitcoin as well. Bitcoin also had high rates. Fine, let's move on. Oh, this was an interesting story. So here it was a coverage of a guy who went 5 million long on perpetual and 5 million short on the future, expecting the funding to be flat. Surprise, surprise, the funding wasn't flat. It was very high. So if it was more or less flat, I was expecting him to make more or less$52,000 on this trade in profit. So it was so it was 10% premium. So I was expecting that the funding will take 5% and the other 5% will be pure profit, times 2.5 months divided by 12 months times 5 million position. That will make 52k. However, it didn't end up well because of the high funding. I estimate that he has lost 100k to 300k if he held it, if he intended to hold it till expiry. I think he bailed out at some point, but you know, this guy was trading looking in the rearview mirror, and you shouldn't do that. That's an interesting thing. This is an interesting article from some time ago. I wasn't expecting that the average Bitmex gambler is 30x long and 20 odd, around 25x short. But they are, so 3%, and they are either liquidated or stopped. That's hilarious. And with average rates of 100% per year, assuming that ETH is flat, such a guy would be liquidated after 11 days of funding at 100% per year. So it was me again moaning that this is not sustainable, this pump. This is a very, very interesting video. I recommend you watch it at least once. Here, Sam Bankman-Fried just leaks a lot of intellectual property. It's a good video. I recommend you watch it. They just demonstrate how they arbitrage markets. So they have automated systems which find discrepancies on a large amount of exchanges. They hold decent amount of funds on the exchanges, and they just capture the premium discount. They monitor their bots. They are aiming not to go directional too much, but I'm sure they do a bit. I think they said that short term that they would go that directional now and then. I think Sam is a very clever guy. This FTX exchange is a really great idea, and it's a net positive for the system. I think it's overvalued now, being raising money at $1 billion valuation. But yeah, definitely have a look at this video. Initially they were hiding under a rock. They didn't want anyone to know about them. Only exchanges knew that they exist. But now they went public and they are capitalizing on how good and how significant they are. They just showed some Bitmex top user, leaderboard accounts, which prove that they are doing some significant volume. Fine, I think it's 20 minutes. We should stop here and we'll continue from the next post. Thank you very much for watching. Please like, comment, subscribe. Please look at the links below. I talk about exchanges in these links, well, in the description, and I have some links for free money and for discounts. Thank you for watching.